I'm Charlie, and I'm here to talk you through how the pandemic has impacted client, advisor, lender relationships and interaction, and how best we can proceed to beat the stamp duty concession deadline. So you're able to book one-on-one meetings with Richard, our underwriter manager, directly. If you have any cases you want to discuss, then we can all help with questions. So please do feel free to get in touch, although there will, of course, be plenty of chances to ask questions throughout the presentation. But for now, I'll get straight into the presentation. Let's discuss how clients think the rules of engagement between lender and broker and client have changed. You can see our main stat here from our most recent UK research that we have undertaken. This was a survey of 2,000 property investors from across the country around how they believe the industry has changed. In a time where human interaction is limited, how do we interact? What is too far for a company? The importance of relationship and human interaction during these 2020-2021 lockdowns has been clear. People are feeling locked away. And we are by nature very social creatures. 65% agree that they feel as though banks over-reliant on technology when providing customer service, thereby removing the human touch due to COVID-19. This was particularly felt in the property portfolio section of 1 million plus, as 78% of those who said yes came from that section. During the lower tier time period, we adapted our offices to ensure that they were COVID safe, so that it became possible to have clients visit our offices and speak to us face to face if they wished. In lockdowns, technology is a key way to ensure communication channels remain open, but a delayed response is constant general emails and quick phone calls are not what clients value. It's important to focus on keeping communication open and being available to clients. Prepare and send out educational material to clients to build trust. We guarantee a response within 4 hours, and this really helps us to create both trust and expectation management, something that could be employed to really help clients who are feeling ignored by mainstream banks and traditional lenders at the moment. I think a great way to come out of a great thing to come out of our current situation is how normal video chats and online events have become as a way of keeping communication open, friendly and human in these strange and busy times. This is something that still isn't being utilised enough between lender and client or lender and broker to create that personal touch. Do you feel as though you lack sufficient knowledge of alternative finance products to consider proposing them to your clients? 61% of the investors we spoke to felt that they don't have the knowledge to even consider alternative finance options. A lot here will be keen and long-standing bridging loan brokers, I would have thought, but if there are any brokers new to bridging, then I think you'd agree that one of the main barriers to offering new products to your clients is specific product knowledge, minus the sales pitch. In the last slide, we spoke about sending educational material to clients to build trust, which works for our experienced bridging brokers as well, but it does take time to create, something we have very little of at the moment. So you can always use something a lender has put together to send out. In fact, MFS will even co-brand to help you create your own external marketing. As a key bridging lender in the industry, we know how important it is to educate brokers and borrowers, which is why we focus on producing a range of different educational content to cater for lots of different audiences. You can utilize more informal blog pieces, longer reports, and even research stats. So now we move on into sort of part two of our presentation, where we talk about the big topic in the market at the moment, the stamp duty holiday. Now, it's obvious that the increase in property sales is partly due to the stamp duty land tax holiday. In total, 2020 saw 3 billion worth of British property transactions go through. This is a 26% jump when compared to 2019. There have been calls for an extension, which will be confirmed or denied in the spring budget on the 3rd of March, although it was discussed in Parliament off the back of a petition signed by members of the public across the country. As lenders and brokers, it's our responsibility to expect the unexpected and prepare should the stamp duty holiday continue. However, we're working under the impression that the deadline is and will stay as the 31st of March, and the main focus is to get buyers comfortable with their purchases before that date. We also have overseas buyer supercharge coming in on the 1st of April, so now is a good time to be reaching out to overseas clients, I would think. We have been incredibly busy, particularly since November, as people want to ensure they meet those deadlines, we lent £45 million worth of bridging loans in November and £22 million in the 3 weeks of December 2020. With the stamp duty holiday coming to an end, and many borrowers are worried reaching the upcoming deadlines, clear communication is fundamental in the bridging industry. More buyers are coming to the market and looking for last-minute property sales before the stamp duty closing date. But with the delays already set due to overcrowding in the market, banks and traditional finance will be unlikely to guarantee finance to meet those deadlines. In our survey, we asked if people were looking to turn to alternative finance in 2021, and out of those who said yes, 45% of those who said yes in the 18-34 years category, whereas only 3% were in the 55 plus age bracket. 61% of those who said yes were in the 1 million plus value of their investment portfolio. These figures show a trend that bridging loans are looking to increase in the future, with younger people entering property investment and being more comfortable with the newer version of lending, not turning to banks, but instead coming to use alternative finance due to the speed and flexibility that those options offer. It's important that lenders are giving you honest feedback on the length of time transactions are taking, both alternative and mainstream, as that's the main issue I'm hearing from brokers at the moment. In fact, 79% of brokers are saying that lenders need to be more clear on their timescales, which is obviously particularly important at the moment. I'm sure some of you will have experienced the overpromise and under-delivery already. As a side note, here at MFS, we move as quickly as the borrower can. But why alternative finance? Why is it on the rise, and how can it help you? For those that are new to the bridging finance, the benefits of alternative finance, such as bridging loan, is that it's fast and secure. We can complete in under 2 weeks, and after 2 of our best months on record, we've just landed a new funding line from an investor worth 150 million to help you and your clients' property finance needs. Bespoke products can be tailored to your clients' needs. Companies often offer a wide selection of products and varying rates, including resi, commercial, and semi-commercial, for example. The fact they are bespoke also means that they can be used to overcome complications and complex circumstances as well. Broken chains, restructuring, bridge to exit, partner buyouts, and lease extensions. She can be flexible. Alternative finance is often more flexible than the other mainstream lenders, which can help with those complex requirements. Do seek out a specialist in complex, though, if that is what the client needs, to save time further down the line. So cheapest isn't always best. You can use bridging for the auction purchases, for refurbishment and conversions, light development. It all depends on the requirements. So they are flexible in that regards as well. Transparency. When you find a good lender, they will give you rates up front and at no hidden costs. You are often able to speak directly to decision makers as well. So as well as having the option to speak to myself as a BDM, you can also speak with an underwriter directly, something you often can't do with a mainstream lender. So to talk to you more about MFS specifically, we have a simple 6-step process that our brokers and clients follow. Essentially, you'll receive the information and decision up front, and we can then work with you to get the deal through as quickly as possible in the best interest for your client. To do so, we front load our underwriting, and we will ask for documentation like asset and liability statements up front, which just enables us to fully underwrite the case and not delay the process. But what does that mean? It effectively means yes means it, and we really do mean yes means yes. We also don't charge any early redemption fees or exit fees, which obviously in the current market works well to make sure clients can take advantage of the stamp duty land tax holiday while they're waiting for their long-term solution to come through. So here's a case study. This is an example of a straightforward case that we facilitated to help an overseas client complete quickly on a property. This means that they don't have to worry about the supercharge coming in April, and they can add to their portfolio with minimal fuss before entering into the delayed process for a longer term solution. So we also have our COVID recovery fund active and helping clients. This was helping clients that had been let down by other lenders. Whether they're taking too long, they've said yes and now left the market, or changed their criteria and are no longer lending at 70% LTV, for example. That point has been more relevant for our bridging lenders. In this first case, we needed to help the client create more time for their buyers to process their finance. This borrower had a bridging loan that they were paying off with the sale of the property, so they were in quite a pickle before we stepped in. On the case below, the borrower was in real need of extra funds to complete the works on the property. They were turning a house into 5 flats, but had encountered delays which also increased costs. To make sure they could finish the project and not lose revenue from getting tenants in those new flats quickly, we helped with a second charge loan to fund the cost of the final proportion of works. On all of these cases, we have continued to send valuers out in person, which we have felt is far more reliable. This was obviously all in line with government guidelines, but it effectively meant that there was no nasty surprises for us or our clients. Technology is important to ensure work continues, so things that we felt could go ahead via Skype, for example, did, such as our solicitors witnessing the signing of documents and such like. We're happy to have video chats with brokers, as well as the usual calls and emails. I am, for one, missing the amount of face-to-face meetings I was having with good contacts and friends in the industry. In our latest survey, we asked, since the beginning of the pandemic, have you noticed that your bank takes longer to respond to requests or questions? 40% said that they noticed an increase in time replies. That hasn't happened with us. And these cases shown all completed to the timeline of the borrower and how quickly them and the solicitors are able to move. Funds can be released from us in as little as 3 days. We have no early redemption charge. We simply have a minimum term of 3 months. And MFS policy is that we will respond within a 4-hour period because we know how important your time is. Our rates. Hopefully this will answer some of the questions that you guys may have been getting ready to ask. You can see that we do everything from first charge resi to second charge commercial and everything in between. Our rates vary dependent on borrower circumstances, but we are particularly good at those complex ones that you've not been able to place elsewhere. So you can speak to myself or Richard on our stand, but in the meantime, Richard will be answering any questions you may have.